Are you deeply concerned that the United States government doesn't have enough of your money to spend? It's okay, don't worry. Politicians have a solution. It's called the wealth tax.
Government is a greedy piglet.
The wealth tax promises to force the rich to pay their fair share by taxing not only their income, property, purchases, and sales, but also their unrealized gains. What is an unrealized gain? Essentially, it's your investment portfolio, or at least that portion that you haven't actually made any real money off of yet. Sure, you may own the stock or bond, but if you haven't cashed it in yet, it's a part of your 401k, but that doesn't mean you can go to the store and buy what you want based off of the stocks you own. In order to do that, you would have to sell the stock, pay an additional tax, and then use what's left over to buy goods and services. But with the wealth tax, that changes. Imagine getting your paycheck, paying your income taxes, then using some of what's left over to go buy a TV, which you then pay sales tax on. Then you get home and are notified that you will now have to pay an additional tax on the TV based off of the wealth you possess. It's a little like that, only it's worse. Because unlike a TV purchase, stocks and other investments are not something that you're readily enjoying, but are instead an investment used to fund businesses and all the opportunities that come with them, while at the same time providing you with some additional wealth in the future if you invest wisely. But if you tax that kind of investment, you're inevitably discouraging it. You're driving people with the means to invest in other businesses to the places that don't punish them for that kind of investment. And this is not pure conjecture. The reason why the number of countries employing a wealth tax in Europe has decreased from 12 to 4 over the last couple decades is because, along with being very expensive to administer, it doesn't typically bring in much revenue, and it drives investors out of the countries where the tax is implemented. In France alone, it's estimated that over 12 years, 43,000 millionaires left the country, and they took all of their opportunities that their investments brought with them. Imagine politicians setting up a kind of financial border wall that's not there designed to keep you out, but punishes you by confiscating almost half your wealth if you decide to leave. In fact, for all of the political marketing around a wealth tax, the only thing that's really produced is a confiscatory form of multi-taxation, which is expensive to administer and punishes investment in the very opportunities that poor and middle-class people need to improve their economic situation. When you look closely, the only thing this really gives us is an opportunity for politicians to engage in class warfare, where the people they claim to care about end up being the casualties of their policies. And this isn't the first time we've talked about this. Take a look at Why a Fair Share Isn't Fair, where we go into detail about who is actually paying federal income taxes and why slick rhetoric is being used to turn us against one another instead of fostering an economic environment where all of us can cooperate, compete, and succeed.